All right, everybody, welcome to another geopolitical analysis video. This will be connected to geopolitical topics, so I hope you can like and subscribe and also comment if you haven't done so already. Thank you so much for the support. Let's dive into commodities. I want to talk about energy. I hope you're having a good weekend or a good start to your weekend so far. I wanted to talk a little bit about US oil, WTI crude oil. Several days ago, I had said that I'm taking a trade on oil. I do believe that oil has been hated for a little bit too long now, and I do think that oil is a bit mispriced, especially for this period. We had heard that on the news constantly in the past that if US would attack the Iran nuclear program or Israel, then things would unravel and prices would go parabolic. Things are not the same anymore. The US is not what it used to be back in the 70s when it was dependent on external countries. It has much more larger reserves and it has better alliances with the energy producers, but it's also producing itself wild amounts and exporting as well. So, in this situation here, I see US oil targeting the high 60s, if not 70 at some point. I think seasonality will play into this as well. But whenever we see such a precipitous drop after a big decline, touching this resistance, we do see that a consolidation takes place a little bit in order to go back and retest. We've seen that time and time again. And if I may here, I'd like to move from the daily into the weekly and take a look at this drop right here. Okay, so we had this parabolic move, right, coming into the COVID situation here. It peaked, and ever since it's been on a decline. Typically, what happens, you have a sharp decline and small bounces. This was a bit of a counter rally trend, and then it furthermore started its decline. But we see that this resistance has been playing, and that the price keeps on jumping into the 80 zone. Last time it bounced, it was in the high 70s. So I see, if we do this mathematically and we deduce the delta, it will take us to the 70s or higher 60s for another bounce. And I do think that this will happen because when we look at symmetry, let me move this guy over here. Don't want to look at my face anyways. Date. When we look at the time that it actually takes to bounce, let me do this again, we see a bit of symmetry. So every 196 days in oil, we've noticed these bounces. Again, 196 days. We put this again, close to 196 days. How long has it been? Yeah, we're entering into that period. So January. Okay? So I do think that when we look at symmetry, especially with the volume of days in bars here, it's giving us of a we of course we round this off, right? It's not going to be precise. That's why we play with options. And in this situation, I think that we can be comfortable in taking 6 months out options and not targeting too out of the money. Somewhere in the mid 60s range, I think, is normal. There's a resistance here on the weekly that I want to just, pardon me for the camera shake here, but this is typical resistance and has been playing out. Okay, so the typical resistance we're seeing is this level here in the mid high 60s. Safe to say, if you want a relatively low risk trade, I think this is a good trade to take. Now, beyond that, I do think that oil will decrease because we're seeing that consumer demand has been decreasing. I think that the tailwinds here will be the consumption in the holidays, in Christmas, New Year's as well. But I do think after that we will see a much sharper decline after all the traveling, the buying, and the transportation has peaked. Okay, much happens at the end of the year. So, end of January, February, March, we should be seeing a sharper drop in the 50s. Okay, so note this, the next 3 6 months, I think we can head back to the 67, 68, 65 level, and then after that, I see us dropping. So let me just draw this something like this. Okay, this is the trade I'm taking. This is what I think will happen. I will be shorting oil again around these levels here. Now, if something extraordinary happens and we have a breakout and sustain the breakout and don't drop much sharper like we have, then that's a different story. Then we can talk about higher prices. But until that happens, which has a lower probability, the most reasonable path is the one that I've drawn out here. I hope you guys like this video. Enjoy the weekend. Thanks so much for the new subscribers. Comment, tally along. Let me know what you guys have in mind, and let's take it a step further. Thank you. Next time, we might look into natural gas. Why not? Thank you. Bye for now.